Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to my weekly show here on Stockcharts TV. Great to be joining you here on Monday as we see the major equity averages resuming the resilient uptrend, the great bull market of 2025. Today, we're going to talk about topping patterns. And you may say, hey, Dave, hold on a second. The market's in an uptrend. You're right. Hey, Dave, hold on. We're seeing higher highs and higher lows. Isn't that bullish? They are. The trends are positive, right? The trends overall are fairly constructive, with some exceptions out there. But generally speaking, the major equity averages pushing onward and ever upward, as I like to say. However, I would always caution you in an environment like this, it is not the time to be complacent. This is not the time to feel like, good thing I don't have to look at charts anymore because everything just goes up. Because that's pretty much when the music tends to stop and you realize that the market is no longer going up, right? That moment when you stop paying attention. So what I thought we would do is actually look at one of the classic topping patterns for two reasons. Number one, to help you be prepared, because at some point we'll start to see those topping patterns and I want you to have them ready to go, ready to kick into gear, ready to recognize on the charts. Also because sometimes you will get failed topping patterns, and those can often be some of the most bullish charts you're ever going to find. I was taught there's nothing more bullish than a failed head and shoulders top. So today, we're going to talk about one stock actually demonstrating what I would argue is probably a failed head and shoulders top. We'll also look back at a couple names that have shown, pretty classic head and shoulders topping patterns before, so we can see the components, think about how they would play out, recognize the signs, so the next time we see those coming, we'll be better prepared. By the way, if you want to follow patterns like this and all sorts of charts, these stocks and many others, stocks and ETFs, as we recap the trading every day in the financial markets, check out my market recap show called Chart This with Dave Keller. It's every weekday after the close on my YouTube channel called Market Misbehavior. We also have a Market Misbehavior podcast. We're about 72 episodes in the podcast. Have had some really fun conversations with some really successful investors. Just last week, I sat down with Viba Jha. Viba went from a corporate executive to a champion trader. She was at the top of the U.S. investing championships a number of years. She talks about her approach, her process, how she selects stocks, how she focuses on using leveraged ETFs to analyze the broad equity universe. Lots of great nuggets of investing wisdom. Some of the inspiration she's drawn from different market experts over the years. You can check out my Market Misbehavior podcast on my YouTube channel as well. All right. Let's talk tops. And again, the market is in an uptrend, right? I mean, we're making higher highs and higher lows. My market trend model applied to the S&P 500 remains bullish as of last Friday. So for now, I'm assuming that the market is innocent until proven guilty. We're going to look at a chart of Johnson & Johnson. The reason why we're looking at Johnny John is because back here in 2024, classic example of a head and shoulders top. It's not a perfect one, but it's pretty good, pretty common to how this pattern will look. So I thought we would do is talk about what this pattern looks like. Now, why are we talking about a pattern like this, a bearish pattern, when the market's going higher? Because to be honest with you, in a bull market environment is where you will see one of these patterns. And I will tell you, when head and shoulders tops start to pop up, you won't believe that it's actually a topping pattern because we're probably still all bullish because the market's coming off of a new high. But that is why we pay attention to these patterns. These are topping patterns that end up popping up during a bull market phase. So now is the time to be thinking about what those patterns might look like so that we're ready. We can recognize the signs when they come out. So I'm going to zoom in a little bit. And I kind of cleaned up the chart. I just have the price in the top and I have the RSI in the bottom. Sometimes you will get some divergences as part of the pattern. I just want to highlight that on the chart if necessary. So this is what a head and shoulders top looks like right about here. And actually, let me annotate so we can draw some lines on here. All right. So what does a head and shoulders top look like? Well, number one, we have to be in an uptrend, right? So we have to be making a pattern of higher highs and higher lows, right? That is a, just classic definition in the technical analysis toolkit of an uptrend phase. The high prices are getting higher. The low prices are getting higher as well. I often reiterate on a chart, higher highs, higher lows. That's just a reminder we're in an uptrend. So let's assume that uptrend is going to continue, but let's look for signs that it's no longer going to continue. So what happens when we keep making higher highs, then all of a sudden we fail to make a higher low? we failed to make a higher high, right? We actually make a lower high. And instead of making higher low, higher low, higher low, all of a sudden we make not a higher low. We undercut the previous low. A head and shoulders top, all it is a way of classifying a classic reversal of higher highs and higher lows to lower highs and lower lows, right? This is what a top would basically look like. If we keep it going in an uptrend, and then all of a sudden the uptrend stops and we start being in a downtrend, that top looks like a head and shoulders top. It is called a head and shoulders top because you have a head, a major peak in the middle. We have a lower high on the left and a lower high on the right. Here's our head, here's our left shoulder, here's our right shoulder. Now, ideally, there's a symmetry to this pattern. If it looks really wonky, like the other, the head and the right shoulder are kind of the same level, it's not really a head and shoulders pattern. If there's only two peaks and not really a third peak, it's not a head and shoulders top. And I will caution you, with classic price patterns like this, we tend to see the patterns way more often than they actually exist out there. And that's just the way our brains are designed. Our brains are designed to identify price patterns. So you want to make sure that you focus on the specifics, the nuances of what creates this pattern, what on the chart will help you confirm that it's a pattern. So one thing I would say, there's often a symmetry, right? So the head, the left shoulder, the right shoulder, the left and right sides of the pattern ideally are pretty similar, right? If there's a huge time gap between the left shoulder and the head, and not much time between the head and the right shoulder, it's probably not a head and shoulders pattern. We want it to be pretty symmetrical, right? Just like your body. Head, shoulders, that's why it's called that, right? So this is pretty good, right? Head is in the middle, left shoulder, right shoulder, pretty consistent, pretty symmetrical pattern. There's a slight uptrend to what's called the neckline. And the neckline is arguably the most important part of this pattern, by the way. The neckline is basically, you take the head and the left shoulder, here's this low. You take the head and the right shoulder, here's this low. We draw a trend line to connect those two. That trend line is called the neckline, okay? And the neckline basically just like the neck, right, between the head and the two shoulders. So the neckline basically is a very important level to watch, because what you have to remember is any price pattern like the head and shoulders top essentially has three phases. You have the setup phase, which is where you can start to see the pattern. It kind of looks like it might be a head and shoulders top. You usually find that right around here. You go, okay, we've made a high, another high. We've now pulled back, and now we're kind of up here. And it looks like this could be a right shoulder, right? So the setup phase of this pattern, I would say, is when it starts to look like a head and shoulders. The trigger, the most important part of this, is the validation, the signal that the pattern is actually completing. And for me, and what the literature would tell you, is breaking the neckline, that's the trigger. Until this head and shoulders top breaks the neckline, it's really not a head and shoulders top. And if you're studying for like the CMT exam, friendly tip, you can't call it a head and shoulders top. You have to call it a potential head and shoulders top, because it's not a valid pattern. It's not a completed pattern until the neckline is broken. That's the trigger. Then, third phase, the follow-through. Once we actually break below the neckline, I like to see additional movement in the direction of the breakdown. Sort of validates, sort of confirms that it wasn't just a one-off, like a one-day thing. This is more of a larger momentum shift. And by waiting for some sort of follow-through, like an additional move in that direction, that's what completes it. So three parts this pattern, and really to any price pattern. Number one, the setup, right? This phase where it starts to look like the pattern, the chart starts to, the pattern kind of jumps off the page, and you're like, all right, this looks like a head and shoulders top. That's when you want to draw the neckline and say, okay, if and when we break this neckline, then it's triggered. Then it is a triggered pattern. So the trigger phase is we break down below the neckline. That happened here at the end of October. The follow-through is the third phase, the confirmation phase, where it continues in that direction. I would say this big day at the beginning of November where we continue in that direction of the breakdown, that's what completes the pattern. So a confirmed head and shoulders top because it looks like the pattern. We break the neckline, that's called the trigger. Then we have confirmation, a follow-through in that direction. That's the chart of Johnson & Johnson, classic head and shoulders top. By the way, there's a built-in objective, a price objective built into the head and shoulders topping pattern. The way you do that is take the height of that pattern and you subtract it from the low. So let me draw a line that kind of shows what that looks like. Let's do this pink. We'll make it an arrow. We'll make it kind of dashed. So here's what how you measure the height of the pattern. You basically go to the top of the head and draw a straight line down to the neckline. Then we want to copy that and say, all right, if that's the height of the pattern, if and when, only when we break through the neckline, have that completion that we talked about earlier, here's your minimum downside objective. Basically says we broke below the neckline, we're going to get minimum downside objective, at least to this point. And as you can see, about 6 weeks later, we did indeed get there. We continued lower, so there's no guarantee that that's the end of the move. It just says, if we get through here, then we're going to go at least to here, based on the height of the pattern. Think of it as like an if-then statement. If this is broken, then we're going to go at most likely go at least to that downside objective, which was around 143 or so, which we ended up getting there in mid-December. We ended up going all the way down to like 137, 138 before eventually finding the low. So that is what a head and shoulder top looks like. Those are all the components. This is a great example to keep in mind. If you bring up Johnson & Johnson, go back to mid-2024. And by the way, pro tip, what I love to do on the Stockcharts platform, I have this chart list, which I just call historical charts. Anytime I find a really good example of a pattern, a really good example of a breakout or breakdown, a flag pattern, a head and shoulders top, a cup and handle pattern, I will actually put the specific time range in here. So I'll actually go to the bottom and say, you know what? I'm going to tell you the specific start and end date, and I would actually make it for that specific date, that range, and then I save the chart in a chart list. So if I ever want to go back and review, what was that really good example of a head and shoulders top? Just to remember, all right, these are all the pieces. This is what it looks like. So then if I see something else, I can go back to my perfect example and say, all right, how close does that look? That's what I like to do. So I have a chart list just called historical charts. Anytime I see a really good example, I pop it there, and I've saved them for a while. So I would encourage you to do something similar if you're a Stockcharts member, which obviously you all should be. All right, example number 2. On that first one, which was Johnson & Johnson back in 2024, really wasn't a great example of where there are divergences. This often can happen. The second example, which is Dominion Energy, ticker D, this is in the utility sector, had a similar head and shoulders pattern in a similar time frame, kind of second half of 2024. But in this case, we had a really classic bearish divergence as well. Let me zoom in. We'll make all the notes just like we did on the previous chart, so we can have a pretty good example. I'm going to zoom into this period right here. You might be able to see what I'm getting at, right? You have a head here, left shoulder, right shoulder. Is this a perfect one? Like, no, right? The left shoulder's kind of busy. The head isn't just one clear head. There's kind of this weird shooting star candle popping up here, but as far as I'm concerned, pretty good, right? And if you look at like a weekly chart, the noise kind of gets out of there, and it's pretty good example of one. But the idea is the same, right? We have a head, left shoulder, right shoulder. While the price configuration is not perfectly symmetrical, the time duration is about right. So if you look, there's about 4 to 5 weeks between the head and the left shoulder, the head and the right shoulder. Similar to what we saw in the previous example, we have a neckline which is trending slightly higher. That's actually pretty common. So let's draw the neckline on there. We'll make that red, and we won't do that. So that's the head and shoulder, the head, the left shoulder, the right shoulder. As we talked about before, the real signal is breaking below the neckline, right? So we have a neckline which is connecting the low from October, the low from November. Those are the swing lows between the head and the two shoulders. We've broken down through that neckline there in early December, continuing lower. So we have the setup, the trigger when we break through the neckline, the follow through when we continue in that direction. As we mentioned on the previous example, we could draw a trend line kind of connecting the head and the neckline. Here we go. So we'll take this. This basically represents the height of the pattern. We can say, all right, if we break down there, I'm going to assume a minimum downside of objective of, what was it, around 48.50 or so. Now, we didn't initially get there. If you look, we actually got down to the 200-day moving average. which ended up serving as support for quite some time. We eventually broke down, and look at that. We actually eventually did get down to that downside objective. But the reason why I think this example is helpful is just as a reminder, these patterns don't happen in a vacuum. So does it still make sense to use moving averages, to use traditional support and resistance levels, to use other trend lines? For sure, right? I think one of the great benefits of technical analysis is that none of these indicators happen in a vacuum. They're all meant to be used together, right? And I would say for me, analyzing a chart is not about one indicator and just following that indicator and that's it. For me, using technical analysis, it's about having a checklist. This is one of the pieces of evidence that I would gather as I see Dominion breaking down here. I'm going to use other things like RSI, like other indicators, other oscillators. I'm going to look for other patterns, look at candle patterns, look at moving averages. So recognizing that the price is hitting the 200-day, we'll probably get some support there before we get to that downside objective. That's a thought I would want to have there in mid-December. So friendly reminder, these don't happen individually. They're all meant to be used together. But another thing I wanted to highlight here on the chart of D is if you look at the highs from September to October, we actually have a bearish divergence, right? The RSI going lower here in the bottom panel as the price is going higher, right? So higher highs, the left shoulder into the head, but here we can see the RSI is actually sloping downward. So we're overbought in mid-December. We make a new high on weaker momentum. That's a bearish momentum divergence. It doesn't happen all the time, but that's something I've recognized and I've noted is a lot of times going into that head, the divergence often can help you anticipate the fact that maybe that's a significant high. You're looking then for a lower high. We're looking for weaker momentum on the breakdown. So RSI can be a really helpful, way of anticipating maybe a pattern emerging. But what I mentioned there briefly, just to continue on that breakdown, right? When we actually break down through trendline support, I often will look down at the RSI to see if it holds 40. When the RSI holds 40, that tells you the trend is still okay. We're still overall pretty constructive. But when the price breaks down on negative momentum, right? So when the RSI breaks below 40, that can often indicate more significant of a valid breakdown. That's what we saw in Dominion, just sort of confirming the fact that we'd broken down through the neckline. All right, so let's go to a more current example. The reason why I want to bring up Nucor is I would argue you may recognize how this is not a perfect example of a head and shoulders top. And let's talk about exactly why. Now, let's talk about the setup, right? Going into the pattern. What are the signs that told us, hey, maybe this is a head and shoulders top? All right, so first off, what we're going to do is look at the head and the two shoulders. Here's a head here, pretty clear. Here's a left shoulder. Maybe there's a right shoulder, I would say here. About right in terms of the time, the head and the left shoulder, head and the right shoulder. That's about similar enough. Do we have a neckline that's formed? We do. And here we can draw the neckline. Yep. So there's the low here. There's the low there. So one thing immediately that's different, you see on the previous two examples, the neckline is sloping slightly higher. That's actually a little more common, right? In the classic head and shoulders top, the whole pattern should be kind of tilted up a little bit. It doesn't have to be, but on average, that's more often what we will see. We'll see a pattern that's actually sloping slightly higher because we're making higher highs and higher lows until we don't. And so that is one thing that looks a little different in the example of Nucor. Do we have a bearish momentum divergence going into the head? We definitely do. We can see the price making higher highs July into late August on weaker momentum. So I would say we definitely have that divergence. All of a sudden we're making a lower high. Note how that second, that right shoulder, that lower high, hit right at the 50-day moving average, almost kind of confirming the fact that this seems like a logical pattern. Now, what did we not get on the chart of Nucor? Phase 2, right? The trigger, right? The trigger in a pattern like this is we break below the neckline. Never got it, right? When we draw the neckline connecting the intermediate lows, we did sell off a bit after that right shoulder, and this is why I think it's a great example to highlight. I know some people were noticing that and probably thinking, all right, head and shoulders top, you want to sell because it's just going to break down from here. You have to remember that part of that pattern, the most important part, is the trigger, which is a break of the neckline. Until you break the neckline, it's not a valid head and shoulders top. So in this case, you never got it. Now, go back to the moving averages that we talked about. I think it's also helpful to remember that besides this neckline, we also have this guy, which is the 200-day moving average. So that also has not been broken. It's about at the same level. So with the chart of Nucor, it seems very clear, I would say, from a technical perspective, until and unless we break below like 129, 130, it's not a valid head and shoulders top because we never got the trigger and we certainly didn't get the confirmation. Look what's happened today. The reason why this popped on my radar is I was looking at this as a potential head and shoulders top. I was looking at this neckline, looking at the 200 days, saying, all right, that's kind of the trigger, right? If I'm looking at a short position, that's the type of breakdown that would tell me, all right, this is maybe the actionable moment. It hasn't happened. And to the contrary, instead of breaking down, we've actually broken up. Instead of holding the 50-day moving average, we're actually breaking above the 50-day moving average. So I would say as of today, it looks like a failed head and shoulders pattern, which is instead of getting the breakdown through the neckline, we're actually getting a recovery higher. One of the things I also like to do to signal maybe an exit from this pattern, the fact that it's no longer a good one, I'll make a green line. How about that? Green for bullish. All right, let's make it kind of pretty green. All right. So what I also will do sometimes is take the head and the right shoulder and draw this neckline, just this, a secondary neckline. Now we have a bit of a structure to the trade here, right? A break below the neckline, and in this case, a break below the 200-day, that would signal a breakdown, a valid breakdown, and indicate high likelihood of much further downside based on the height of that pattern. To the contrary, if we fail to break down and if we break out above a neckline, starting with the head and going to the right shoulder, it's starting to look a lot less like a head and shoulders pattern. It's looking like a failed head and shoulders top. I would say, given the fact that we're now broken above the trend line, broken above the 50-day moving average, no longer a valid head and shoulders top. So I would say from my perspective, head and shoulders tops are incredibly valuable, right? And we look back at the examples of like Johnson & Johnson. I already messed up the time here. Here we go. Johnson & Johnson back in 2024, Dominion back in 2024. Great examples to remember, to reflect on, to save, and look back on because they checked all the boxes, right? They had the head and shoulders structure, nice symmetry, a breakdown of the neckline, the trigger, the confirmation, the follow-through. All of those things happened, which by analyzing those examples of good examples in the past, it helps you recognize when an example is not similar, right? And thinking about what's different. The neckline sloping downwards, the fact that we never broke below the neckline, the fact that, to the contrary, we've actually broken above the right shoulder and broken above a trend line using those major peaks. Analyzing some great examples in the past can help you recognize not so good examples happening today. And then you don't get trapped on the wrong side of things, right? I've found a lot of times people get into trouble using patterns like the head and shoulders by anticipating a pattern that is not fully developed. Be patient. Wait for all those boxes to be checked. What do you think of this example with Nucor? Is there another example of a good head and shoulders top that you found, or a head and shoulders bottom, what's called an inverted head and shoulders? Drop a comment. Let me know the ticker. I'd love to take a look, maybe save it in my historical charts list. I hope you found this helpful walking through the head and shoulders patterns. I hope it makes you think about charts like Nucor, which may not be following that script, and thinking about the specific levels and triggers you want to be patiently waiting for. As a reminder, my daily market recap show called Chart This with Dave Keller, every trading day after the close. You can find that as well as my Market Misbehavior podcast on my YouTube channel called Market Misbehavior. For now, I will say thank you so much for joining me. I'm Dave Keller with Market Misbehavior, reminding you it's always a good time to own good charts.